Hey guys, what is going on? Welcome into the video. So we had a lot to get into in this one. So starting out, we're going to go over some macro data points and overall thoughts on what could play out for the broad market next. And then we're going to go over a bunch of long and short, low risk, high reward trade ideas for the week and weeks ahead. So let's get into it. And as a reminder, there is timestamps in the description for any part of the video that you want to skip to. Alright, so starting out, let's take a look at the main bear theses for potential risk off move coming back to the market. So number one is the 10 and 2-year Treasury yield curve is continuing to deepen its inversion. This is one of the biggest recession indicators and it's currently the most inverted that it's been since the early 1980s. So next is based on where Treasury yields are at, the historical fair value of the S&P 500 would be at about 15 times earnings. Currently, the S&P is trading for around 19 times earnings. Now, this is obviously a super important metric, and for the past few years when bonds have been low, investors experienced the TINA effect, which stands for there is no alternative. Because bonds were essentially paying nothing, investors really had no other place to go besides buying stocks to earn a decent return on their money. Well, now there is an alternative, as investors can buy bonds and earn a risk-free 4% plus yield on their money. So now there is an alternative, and if risk comes back to the market, which I personally suspect that it will, investors can easily just flock to the safe return in yields. So next up, recently in the market, we have seen a lot of the worst performing stocks and sectors in 2022 be some of the best performers so far in 2023. This is called the January effect. Tax loss selling is out of the way, so we've seen a lot of money flooding back into the worst performers of last year, which has caused a short-term pump and short squeezes in a lot of these stocks. Something that will likely be a short-term effect before they head back down. If they were down big in 2022, it was not for no reason, obviously. There is a lot of bankruptcy risk on the horizon. And finally, economic data is still staying surprisingly strong in the short term. Employment numbers data and inflation numbers and CPI and PPI have recently surprised to the upside. This is not going to make the Fed happy and will result in rates to stay higher for longer. Now, a few more important charts and data points. The Philly Fed Manufacturing Index is another indicator pointing to a recession on the horizon. Bankruptcies are on the rise according to Bloomberg, and this is the worst start to a year that we've seen since 2010. And charts like this are pointing to the recession happening later than people think, potentially deeper and longer than the consensus analysts are projecting. Alright, so we have to ask ourselves, why are stocks going up right now if all of these data points are showing major risk on the horizon? Number one is stocks going up gives institutions and hedge funds FOMO, fear of missing out. The performance is compared to the major indexes, and if the indexes are going up big, these funds are forced to buy in and chase these moves, because if they don't, their customers will withdraw their money due to their underperformance. Retail investors and traders are absolutely flooding into stocks right now, which then makes institutions chase and starting that domino effect of sorts of stocks going up. Another big factor right now is the option buying frenzy, and more specifically the zero day to expiration option buying frenzy. Take a look at this chart. Over 40% of the total volume on options bought for the S&P are options that expire in less than 24 hours. With the current buy the dip mindset that the market has, every day we are seeing traders just load up on very short-term calls, which are bullish bets on the market. Every time a trader makes these bullish option bets, market makers have to cover their sold option by buying the underlying shares, which is the S&P in this case, which essentially gamma squeezes the entire market to the upside. This works on the upside but can also work even faster on the downside, so be aware of that if the market does roll back over. And finally, there is no doubt that technicals are bullish right now, and as traders, there is no reason to fight the trend, and right now a lot more money is trying to front run a potential Fed pivot and rate cuts, which based on the recent economic data is not coming anytime soon, which is another risk to keep in mind for the market. Alright, so the most important question is how do we trade this market? Number one, the most important thing is only price pays. As traders, we don't have to be right. The goal is to just make money. If technicals are pointing up and stocks are rising, there is zero reason to be shorting and trying to fight the trend right now. Don't overthink it. I also think one of the worst things that you can do is to try to call tops and bottoms for stocks. The best risk-reward trade will never be trying to catch the full move. The goal with trading is to take opportunities where the odds of losing money is least and the odds of making money is most. I'm personally a big believer of having a slight lean or opinion of where things can go next, but overall being an unbiased trader. For example, as you guys know, fundamentally, I think the market has a good chance to drop soon, which would be my slight lean. But if stocks keep going up, I'll keep on making bullish trades. If the market looks toppy and technicals are set up for that drop to happen, believe me, I'll be more than prepared for that opportunity, but until then, I will focus on trading with the trend. The next bullet point on here is to trade small when you're unsure about overall market direction. For example, right now I'm looking at two main scenarios for the broad market to play out next. The first one is this bearish scenario where the S&P just broke below this key trend line, and if it fails to reclaim back above, this could be the start of a downside move in which the retest of the long-term trend line would be the major decision point. And number two is this consolidation pattern. It's just a simple bull flag consolidation, which is setting up for the next leg higher for the market. And if that does play out, it would look something like this. So right until one of those scenarios play out and we resolve from this recent major chop zone for the market, the thing to do is trade small until we're for sure on which scenario does play out next. And the last bullet point I have on here is to take low risk, high reward setups. We're going to take a look at a bunch of trade setups like this later in the video for what I'm looking to play in the coming week. Alright, so next I want to take a look at an important warning indicator under the surface for the market, and that is individual stock breakouts failing. Taking a look at a few examples that just happened, Shift4, ticker symbol FOUR, was one of the strongest names in a recent market leader. It built a nice base below the pivot, attempted a breakout, which got sold and turned into a violent sell. Another one is TOST, ticker symbol TOST. This is one of the best looking setups going into last week as it was starting to break out of a 1 year long base pattern. Well, guess what? Earnings did not support this move and it ended with a 20% plus gap down and failed breakout. And one more is Fiverr, ticker symbol FVRR. This broke out of a 9-month long base pattern on heavy volume, looking primed for more upside, but right after that breakout, of course, sellers came in and it sold right back down for a failed breakout. And sure, some breakouts have worked and followed through for some stocks. I'm obviously picking and choosing examples, but the heavy majority of breakouts for the stocks that I've watched have ended up failing. This is a big warning sign under the surface for the market. If you look back to the start of previous bull markets, breakouts will work and follow through all over the place, and it's very easy to make money buying breakouts, which is just not the case right now. Now overall, just looking at the broad market technicals, there is a high likelihood that we have bottomed, but in my opinion, it will not be an easy ride up from here. Expect volatility and plenty of risk ahead. Alright, so now getting into a bunch of individual trade setups and ideas for the week and weeks ahead. Starting out with a few long ideas. The first one I'm watching is Snowflake, ticker symbol SNOW. This is an interesting one here as it recently just reclaimed above the 200-day moving average for the first time in a year and has now pulled back to test it as new support. If it's able to hold above as support, this is a nice low risk long entry with a tight stop loss right below the 200-day, as it's also a possible cup and handle pattern in the making as well. Another one that I'm keeping watch on is ONON, ticker symbol ONON. This has a nice base and has shown recent relative strength. Possible low risk long entry here with a tight stop loss below 21 per share in this cup and handle pattern where it can break out above 24 per share. AST Space Mobile is another interesting long setup here as it broke above its 6-month long downtrend and showing some nice recent strength. Watch for it to hold above $6 per share now, with 7 in the 200-day moving average above as the first target, in which above triggers further upside. It's also possible sympathy play off the space sector potentially heating up. We just saw LUNR go on a 500% plus run in just a few days. Alright, so one that I'm watching as a possible bear setup in the week ahead is Nvidia, ticker symbol NVDA. It just put in a possible double top off the long-term gap fill and has built out a nice range between 208 and 230. I'm watching this as a possible short or put option play on a break below 208 to trigger downside at 200, 193, and then 188 as initial downside targets. Apple is another that has built out a tight consolidation range. It is sitting right below a major level at 157.42. It's at the top of my watch list as a possible long play above 157.42 to start a leg higher, or short below 150 or 148 as the levels that would trigger downside below. Tight consolidation setups like these are great to play, as whichever way it breaks, a substantial move likely comes next from all of the built-up energy and traders flooding in depending on which direction that move breaks. And the last one is Metastock, and this has pulled back after its recent huge gap up. It is testing its key pivot zone at 169.5 to 171.5. If it's able to hold above for a balance, I'm watching this as a possible long trade for a wedge breakout and move back up to 180 to 182, or a short play on a break below 169.5 to move further into the gap below. So that is everything that I'm watching for in the week ahead, including broad market thoughts and those individual trade setups and ideas. Hope you all enjoyed. Whoever adds some value to you. If so, make sure to hit the like button and subscribe button. It helps me out a ton and I would greatly appreciate it. Let me know some thoughts in the comments below, what you expect from the broad market, what setups you are watching this week. For anybody interested in joining the private Discord chat for my personal trade alerts, nightly watch lists, and you can ask me any questions in there. That is the first link down below in the description. And hope you all enjoyed. Thanks so much for watching. I will catch you next time. Peace out.